everyone, and welcome to another Bitwave Quick Hit. Okay, today, Pat, why would businesses hold crypto in an LLC?
All right. So this is like LLCs are a really interesting corporate structure that you'll see around. I mean, like LLCs, LLPs. These are law firms are generally some form of this. Small businesses are generally some form of this. These are sort of different than a Delaware C-Corp, which is what a startup would be. That's what like Bitwave is and what Google is and things like that. So LLCs they offer the same idea, which is that there is a entity that assumes the liability, which is not the underlying owners of the business. So if you do something as a business that produces a liability, in the crypto world, very often this would be like, you're trading, or an exchange is a great example, right? So if you're an exchange and you are rehypothecating funds and the network, and there's like a hack and you lose all those funds, there was nothing that you did that was malicious. You didn't break any laws. So you can't pierce the corporate veil through the laws, but you basically lost all this money. All those losses are getting concentrated in one single place, and you want to protect that and protect yourself so that your own assets do not become party to the bankruptcy proceedings of the corporation that you're kind of dealing with. LLCs are, so that's like a corporation in general. That's why we have them. LLCs are a very particular type of those that are super easy to stand up, and tend to have a lot less regulatory overhead. And they have a couple of like tax benefits. So this is not meant to like go into every single tax benefit in the world, but the biggest ones are that they tend to have a pass-through taxation strategy versus with a Delaware C corp, like let's say Bitwave. The only real way that we can get money out to our shareholders and investors and ourselves is you pay employees a salary that is 100% deductible off of your revenue. So that's one way to do it. And the other way is dividends, which is not deductible off of your revenue, and has a you are still paying tax on the revenue as a corporation. And then when you get a dividend as a shareholder, you pay tax on the dividend. And so it's basically dividends are double taxed. Now this is like vastly oversimplifying it and getting into it. But it's a big issue. It's obviously the way you want to structure a corporation because you get other benefits from that. But if it's just you and your brother want to buy some Bitcoin and you want to hold it as a joint ownership, and then if you sell it, you basically want to get that cash and sort of treat it as though it was just a straight gain loss that you made. An LLC is the way to go because you have a joint ownership of this asset. So you and your brother will own like one Bitcoin. If you sell half of it, you both have a equal exposure to that zero point 0.5 Bitcoin sale, and it flows through to you as an individual, where you can actually track your gain loss on it. So you're not doing if you just want to sell it and then cash that out. It has a dramatic benefit where you're not paying payroll taxes. You don't have to use gusto, like all these different things that you might do with a big corporation. You basically you can sell it and then flow the funds out, and then you really just pay the what you would pay normally as an individual for gain loss taxes on it. So that's like the biggest reason that you see a lot of DATs will set up LLCs to protect their funds. You'll see individuals if you have folks buying assets, they'll set up LLCs to protect them. Like VCs are sometimes structured as partnerships. I mean, they're always structured as limited partnerships in some mechanism. Same idea that they're kind of flowing through, and you can get that benefit of not doing the dividends, but actually flowing through the gain loss on the other side. So there's reasons to do it, and it really just comes down to a tax strategy, and then what the purpose of this holding company is. Like if you're not actually doing anything, if you're not staking, if you don't have revenue, if you're not paying employees, it really just simplifies it. It's a lot cheaper to set up. It's a lot cheaper to manage year over year.
Got it. What are some challenges of holding crypto in an LLC?
Well, you have to be very clear. You still have to do all the record keeping. So you don't get away from record keeping. You still have to do all the record keeping. You do have to set up, you cannot commingle your funds, right? This goes for any corporation, but LLCs is a good example where, even though it seems like, oh, an LLC it's so pass through, I can just, I'll just put this money in my exchange account and hold it there, and that's great. Like if you do that, you essentially are piercing the corporate veil, or at least you're creating a mechanism for the IRS or for someone to come after you if you do have some sort of liability issue. So like, you basically have to set the LLC, and then you have to go and you have to get a crypto exchange account that is associated with that LLC. And then you have to do all the management there. figure out how you're going to manage the password with your brother, make sure your brother doesn't run away with all your crypto, all that kind of stuff. So there's a burden, and then every year you're filing taxes for the LLC, and you generally have to pay some sort of upkeep to the state where you actually incorporate the LLC. So there's overhead to doing this, but it can protect you depending on what all you're doing.
All right. Anything else about owning crypto in an LLC?
Nope, that's it. It's a great way to do it if you want to like get into crypto investing with like your family and add some protections. It's a really good way to do it.